So to attempt to spark some kind of buying stampede, we've seen a couple of them this morning. Nothing's happening right now. Nobody's taking a bait. Would-be buyers still sitting on the fence. Now, to be fair, there's really not enough news out there yet maybe to build that sort of buy-to-dip narrative, at least today. Yields still have this upside bias, even though they're coming back a little bit. Not enough earnings are out just yet. And the usual chatty members of the Fed are all now in the quiet car. So remember, folks, nobody rings the bell when the market's at the bottom, and nobody rings the bell when it's at the top. So it just sort of means ultimately seducing fence sitters off the sidelines, beginning, of course, with the swashbuckler types. Now, my next guest is brave and brilliant, but I don't think she's a swashbuckler. Managing Director of Market Gauge Group, Michelle Snyder. Michelle, the rally attempts today, what's going on? I mean, we've had a couple. They both fizzled. What's going on? What's the play there?
Well, right now we have a lot of hesitancy, as with all the reasons you just mentioned, and you can add Russia, Ukraine to some of those reasons as well. And yet there has been, even though not big buying coming in, there has been a level of support that's being established. So the market is trying to figure out whether or not this inflation narrative is something that really is going to force the Fed to be way more hawkish. There's been predictions for everything from 2 to 6 interest rate hikes this year. Whether the economy, which right now is contracting, will come back because COVID will at some point go away. And then on top of that, as you mentioned before, we have earnings seasons right in gear. People a little confused looking at the banks, how split they were. So I think all of this right now has put us into a situation where we are very range bound, as opposed to we're going to crash or we're going to make new all-time highs.
Yeah, I saw on Twitter you used the term range bound about a dozen times. What does it mean, though, when I see that as an individual investor? What does that mean? Does it mean I'm okay? In other words, I do have a level of support, and it's just a matter of breaking through the top of this range as a buy signal?
Well, it really means that we have to adjust a little bit to our mindset of buying every dip means that we're eventually going to go to new all-time highs. Now, so it also requires some patience. So let's look at IWM, which had literally a 10% trading range from February 2021 till now. Hasn't broken the range. Today's a perfect example. It went down to 205. It was like, uh-oh, lights out. And then a little bit of buying came in. And so I think what you talk about range bound is you get these support levels and you can kind of get your feet wet, or if you have existing positions, sort of be on standby about maybe being a little bit more protective. But there's no need to panic, because even when that range may break, again, we may find another floor, but I think right now the market is telling you that it's stagnating, which is part of the word stagflation. That's what we have going on.
Really? Wow. Hey, let me ask you about J.B. Hunt. They had a really nice earnings report. The stock gapped open $3. It gave up those gains. And speaking of which, is sort of grappling with that 200-day moving average. But I know you and I have talked about the transportation index before, the old Dow theory kind of thing. They broke out last year, and the rest of the market went along for the ride. Do you like them here? Are they oversold enough to start looking again?
Well, again, let's talk about range bound. So what's interesting about right now, if we look at the ETF IYT, it is holding the 50-week moving average. And so that means that it's actually one of the top performers, along with the regional banks and semiconductors, which are still holding. And that also means is that if we can continue to hold here, there's opportunity. But also if we step back and look at what it means for the economy, in terms of an inflationary environment, we can actually have transportation doing well, because remember, demand goes up. It's supply that goes down. But in the demand, we have a hoarding mentality, which means some of these railroads and some of these trucking services like J.B. Hunt can continue to do well. And then eventually, again, after COVID, transportation, cruise lines, et cetera. So I still consider it to be the best hope for any growth in the economy.
Okay. Michelle, thank you very much. We always learn a lot when you're on. Thank you. See you soon.